Good morning, everyone. This is Marshall Gittler bringing you the morning comment for Monday, June 30th. We've got a really busy week ahead of us. Today I'm going to run through some of the highlights of the week. On Tuesday, tomorrow, the Reserve Bank of Australia meets. There's almost no likelihood of a change of rates, so the focus will be on the RBA's view of the economy. The last several meetings haven't had much impact on the Aussie dollar, and I wouldn't expect this one to be much different. Japan's Tankan is expected to show a decline in current sentiment, but optimism about the future, reflecting the temporary impact of the consumption tax hike. So the forecast for the third quarter will be more important than the results for the second quarter, in my view. Looking at the market reaction over the last year, dollar-yen was at least somewhat lower than before the announcement within 30 minutes after the release. Tuesday is also PMI day. The official China manufacturing PMI for June is likely to show a rise after the preliminary HSBC market PMI for the month unexpectedly rose. That might help the Australian dollar. Then come the June manufacturing PMIs for the UK and many of the other European countries, as well as the final PMIs for the Eurozone, Germany, and France. Plus the all-important ISM index for the US. That's expected to show a modest rise and continued high level on the prices paid index. I think that's likely to be dollar positive. Separately, Fed Chair Janet Yellen will speak at the IMF, followed by a 30-minute conversation between her and IMF Managing Director Christine Lagarde. Given the IMF and Ms. Lagarde's view of U.S. policy, this conversation could take a notably dovish turn. Thursday is the big day of the week. There's an ECB Policy Board meeting. We'll discuss this more later in the week, but in short, I don't expect them to announce any new measures, and so I think volatility on the day is likely to be much lower than its last several meetings. The Riksbank, on the other hand, is widely expected to lower its repo rate to 0.5% from 0.75%. The key then will be not whether they cut rates, but how they see the rate path progressing afterwards. As Friday is a national holiday in the U.S., the non-farm payrolls for June will be released a day earlier than usual. With inflation in the U.S. creeping up towards the Fed's target level, the employment data are even more important than usual as the main thing left standing between the FOMC and a rate hike. As for today, the Eurozone CPI for June is expected to stay at 0.5% year-on-year, with the core rate also forecast to remain at its level and from May. Normally, no change from such a low rate could be expected to weaken the euro, but with the ECB likely to be on hold, inflation would have to change dramatically in order for it to be market affecting. Similarly with the Eurozone money supply for May. From the UK, Bank of England mortgage approvals are estimated to have decreased in May. The indicators become even more important after Governor Carney's latest comments to cool the housing market. In the US, pending home sales for May are expected to have accelerated, while the Dallas Fed Manufacturing Index for June is estimated to have increased. The Chicago Purchasing Managers Index for the same month is forecasted to have decreased, although that would bring down the year-on-year pace slightly. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.